On March 4th, 2025, the financial world watched in disbelief as President Trump dropped a bombshell. He announced a hefty 25% tariff on all imports from Canada and Mexico. This unexpected move has sent shockwaves through the global economy, leaving many reeling from the sudden impact. The tariffs, effective immediately, targeted two of America's closest trading partners. This decision marked a significant escalation in Trump's protectionist trade policies, leaving analysts and economists scrambling to decipher the long-term consequences. The immediate aftermath of the announcement was palpable. Trading floors buzzed with frantic activity as investors grappled with the news. The Dow Jones Industrial Average, a key indicator of U.S. market health, plummeted by a staggering 649 points. This sharp decline reflected the widespread panic and uncertainty that gripped the markets. The S&P 500, another major index, wasn't spared either, tumbling by 1.8% in response to the tariffs. The tech-heavy Nasdaq composite mirrored the sentiment, experiencing a significant drop of 2.6%. The market's reaction to Trump's announcement was swift and brutal. The Dow Jones, S&P 500, and Nasdaq Composite all experienced their most significant single-day losses in months. This dramatic plunge underscores the depth of investor concern over the tariffs' potential impact on the U.S. economy. The suddenness of the announcement only amplified the sense of panic. Many investors were caught off guard, having anticipated a more measured approach to trade negotiations. Adding to the uncertainty was the lack of clarity surrounding the tariff's duration. The White House provided no firm timeline for their removal. This open-ended commitment to protectionism further unnerved investors who crave predictability in policy decisions. The market turmoil served as a stark reminder of the interconnectedness of the global economy. When one of the world's largest economies implements such drastic measures, the ripple effects are felt far and wide. In his address, President Trump defended the tariffs as a necessary measure to protect American jobs and interests. He cited several reasons for his decision, including concerns about drug trafficking and illegal immigration from Mexico. The president asserted that these issues posed significant threats to national security and required a strong response. He also expressed frustration with what he perceived as unfair trade practices by both Canada and Mexico. Another factor driving the tariffs, according to Trump, was the ongoing trade war with China. He accused China of failing to adequately address the flow of fentanyl into the United States. In retaliation, he announced an increase in tariffs on Chinese goods from 10% to 20%. This escalation of the trade war further unsettled global markets, raising fears of a full-blown trade conflict. Trump's decision to link the tariffs to issues ranging from drug trafficking to trade imbalances with China has left many observers puzzled. The economic fallout from the tariffs was not long in coming. The Institute for Supply Management, or ISM, reported a significant slowdown in U.S. manufacturing activity. This slowdown, attributed directly to the tariffs, raised concerns about a potential recession. The ISM report also highlighted job losses in the manufacturing sector, adding weight to the fears of a broader economic downturn. The tariffs disrupted supply chains, increased costs for businesses, and dampened consumer confidence. The tariffs' impact extended beyond manufacturing. Industries reliant on Canadian and Mexican imports, such as agriculture and construction, also felt the pinch. Farmers faced higher costs for essential inputs, while construction companies grappled with rising prices for lumber and other materials. The tariffs' ripple effects were felt throughout the U.S. economy, fueling uncertainty and dampening growth prospects. The imposition of tariffs sent shockwaves through global markets. In China, manufacturing orders surged as buyers rushed to secure goods before the tariffs took full effect. This surge, however, was seen as a temporary spike driven by panic buying rather than a sustainable trend. European markets, meanwhile, showed surprising resilience. Germany's DAX index rose by 2.6%, while France's CAC 40 gained 1.1%. These gains were attributed in part to positive inflation reports, which offset some of the gloom surrounding the U.S. tariffs. The outlook for U.S. markets remained murky. Treasury yields, a key indicator of investor sentiment, declined as concerns about a slowing economy grew. Market expectations pointed to at least 2 interest rate cuts by the end of 2025, a sign that the Federal Reserve was prepared to act to mitigate the economic damage from the tariffs. However, the long-term impact of Trump's protectionist policies remained uncertain. The tariffs introduced a new layer of complexity to an already fragile global economic landscape, leaving investors and policymakers alike bracing for further turbulence. Follow us for more business and economic news, trends, and reports. Drop us a comment. We would love it if you hit like and subscribe.